Herzlich willkommen zu unserer heutigen Sendung aus dem Energiestudio in Berlin. Wir wollen Ihnen heute den aktuellen Gas Market Report der Internationalen Energieagentur vorstellen. Mein Name ist Charlie Grüneberg. Ich leite die Kommunikation hier bei Zukunft Gas und den Report werden Ihnen die IEA-Experten Gergely Molnar vorstellen und seine Kollegin Carole Etienne. Gergely and Carole, can you hear us? Great, okay, yeah, we can hear and see you. Wir sind sehr gespannt, denn die Heizsaison hat begonnen und wir haben zuletzt auch wieder öfter die Blicke in Richtung Gasspeicher gelenkt. Die Speicher sind gut gefüllt. Gestern erst kam die Meldung, dass sie praktisch bei 100% stehen. Wir haben in den vergangenen Wochen an den Märkten aber auch wieder viel Nervosität gesehen. Beispielsweise als der Baltic Connector zwischen Finnland und Estland unter noch ungeklärten Umständen beschädigt wurde. Was haben wir also zu erwarten von diesem Winter und von den kommenden Monaten? Das und vieles mehr erfahren wir in den nächsten knapp 60 Minuten. Die Veranstaltung wird wie gewohnt aufgezeichnet und im Nachgang auf unserem YouTube-Kanal veröffentlicht. Wir senden Ihnen die Präsentation der beiden Referenten und den Link zur Aufzeichnung später auch zu. Und wenn Sie Fragen haben, worüber wir uns natürlich sehr freuen, dann nutzen Sie die Handhebelfunktion oder stellen die Fragen im Chat. And now I will switch to English, and I'm very happy to have you, Gergely, here with us, and also a warm welcome to your colleague, Carole Etienne. It is always very interesting to hear from you what has happened in the last weeks in the gas market. There are a lot of interesting topics. So in the newest edition of the report of the IEA, you put a special spotlight, for example, on Africa and the potential for gas to contribute to regional economic growth and improved energy access. And so, Gergely and Carole, the floor is yours, and we are very keen on your information.
Charlie, many thanks for your kind words of introduction. My name is Gergely Molnar. I'm a gas analyst at the International Energy Agency, and today I'm joined by my colleague Carole Etienne to present our latest medium-term gas market report, which we published just about months ago, and which is, of course, available free of charge on our website, iea.org. And today's presentation will be very much structured along the lines of this report. First, we will discuss the most recent market developments, and then we will dive into our medium-term outlook, indeed with a special spotlight on Africa and on the Asian markets. And last but not least, we will also discuss the prospects of low-emission gases. So on this slide, we are just showing the wide roller coaster on which natural gas prices have been for the last 1 year and a half. Of course, following the invasion of Ukraine by Russia, gas prices soared to all-time highs in 2022. But since then, market tensions have moderated quite significantly over the first 10 months of 2023. And this has been really due to a number of reasons, including timely policy action, effectively working market forces, and mild weather conditions. And when we are looking at the Asian and European spot prices, we see that they have been averaging actually below their 2021 levels in the second and the third quarter of 2023. Now, this being said, both European and Asian spot prices remain well above their historic averages. TTF is currently trading approximately 3 times above its average price between 2016 and 2020. And it is also worth to note that European gas prices are now almost 5 times higher than Henry Hub prices in the US, which is raising a number of questions around the competitiveness of European industry, especially in the gas and energy-intensive sectors. What we would like to highlight is that this easing of market tensions has been really driven by the demand side. And on this slide, we are showing the evolution of natural gas consumption in the key import markets in the first 3 quarters of 2023. In Europe, gas demand declined by approximately 9% over the first 3 quarters of the year. And this has been really driven by all the end-use sectors, including residential and commercial sectors, where gas use has been depressed partly by the mild Q1, but also by behavior changes and fuel switching. And we also see a quite steep decline in gas-fired generation across the European markets, down by over 15% year-on-year, which is due to lower electricity consumption, but also the continued expansion of renewables and improving nuclear availability. And last but not least, we also see in Europe that gas use in industry remained below last year levels in the first half of the year. And when we are looking at the most recent data points, we see some signs that it starts to recover compared to the 2022 levels, albeit it remains well below the pre-crisis levels. And one important point also to note when we are considering gas demand in Europe is that the net injection needs in Europe have been significantly lower than in 2022, mainly because we opened the 2023 gas summer with storage levels which have been significantly higher in April compared to 1 year ago after the mild winter season. And when we are looking at the major Asian markets, Japan, Korea, Singapore, we also see that gas demand is down compared to 2022 by approximately 6% decline. And this is partly due to lower electricity consumption, but also improving nuclear availability, especially in Japan. But when we are moving to China, we see that demand growth is clearly back. Our latest estimates indicate that China's gas consumption increased by 7% year-on-year. And this has been partly due to the expansion of commercial and industrial activity, as well as higher gas burn in the power sector, partly because of the lower hydro availability in the first half of the year. And when we are looking at the emerging Asian markets, as well as India, we also see that demand is getting back to a growth trajectory supported by industrial demand, as well as higher gas burn in the power sector. But altogether, when we put these major importing markets together, we see that approximately demand was down by about 20 BCM, and also the storage injections were down by approximately 20 BCM compared to 2022. And this lower demand has been playing a major role in easing up the market tensions in the first 3 quarters of the year. But we should not forget that the supply side remains rather tight. And on this slide, we have been putting together the main channels of international gas trade, namely European pipeline imports, Chinese pipeline imports, as well as global LNG supply. And I think what is really key here is that Russia's piped gas deliveries to the European Union continued to decline over the first 3 quarters of 2023, and they dropped by approximately 35 BCM. And during the same period of time, global LNG supply increased by just a mere 3% or 11 BCM. So it was not sufficient to offset the steep declines recorded in the Russian piped gas deliveries. And when we are looking at some other piped gas supplies into the European Union, including from Norway, they have been also down year-on-year because of more heavy maintenance. So, when we are looking the global gas market from a supply perspective, it remains rather tight. And this is in a way highlighted by this heightened price volatility we are experiencing on the European gas market. On this slide, we are showing the evolution of historical volatility on TTF, and we are showing that it actually reached its highest level in August of this year since Russia's invasion of Ukraine. And this volatility has been fueled by the extended outages in Norway, but also the strike risks in Australia. But in a way, this is also the symptom of this quite tight supply picture we described on the previous slide. On the bright spot, European storage sites are at the moment close to full of their capacity. They are filled up to 99% of their working storage capacity, and they are standing approximately 12 BCM above their 5-year average. So we are in a quite comfortable position, and this should give us cautious optimism ahead of the next winter season, ahead of the 23-24 winter season. This being said, full storage sites are no guarantee against winter volatility and risks of supply disruptions. And on this slide, we have put together some of the key exogenous risks we see, including a cold winter, which could translate into a sharp increase in residential and commercial demand in Europe. But also considering the geopolitical context, we can't exclude a further reduction in Russia's piped gas deliveries to the European market. And there is, of course, a number of question marks about the availability of LNG to the European market, partly because of the uncertainties related of LNG production facilities, including in Egypt. And there is also a number of question marks related to the appetite of China, which came back to the LNG game quite strongly. And I would like to remind ourselves that in China, there is a growing share of temperature-sensitive demand, especially in the northern part of the country, which actually is facing an early cold spell. So there is a number of risks which could renew potentially market tensions. And as such, it is very important to highlight that, in our view, the best way to hedge against these exogenous risks is to keep demand under control and to continue with the structured demand reductions we have been undertaking, including more efforts on energy efficiency and scaling up renewables. With that, we would like to move to our medium-term outlook, and let us start maybe with the global gas balance from a supply perspective. This slide is in a way similar to what we have been showing in a few slides ago. It basically portrays the key trade channels for natural gas. And I think that what is quite important to note here is that global LNG supply is expected to expand by about 25% between 2022 and 26, and 70% of these additions are expected to come online in 25-26. And this is why we expect that the market is going to rebalance towards the end of our forecast, which could, of course, ease up market fundamentals and unlock some price-sensitive demand, including in the fast-growing Asian markets. Now, it is also worth to note that most of this incremental LNG supply is expected to be coming from North America and Qatar, as well as to a lesser degree from Africa. When looking at the demand side, our expectation is that global gas demand will grow by 6% between 2022 and 2026. And overall, this growth will be 1/3 lower than it has been in the previous 5 years. And this slowdown is very much due to the fact that gas demand peaked in the mature markets of the Asia Pacific, of North America, and in Europe. And actually, in our forecast, gas consumption declines by 1% per year in those markets when we take them combined. And as such, most of the demand growth is concentrated in the gas-rich markets of the Middle East, of Africa, as well as in the fast-growing markets of the Asia-Pacific region. And here alone, China accounts for half of incremental gas demand over the medium term. And when we are looking at gas demand growth from a sectoral perspective, I think what is quite striking is that most of the demand growth is expected to be coming from the industrial sector, which alone accounts for 60% of the demand growth over the medium term. And this is, in a way, a change from the previous 5 years, where gas demand has been largely driven by the power sector, which grew by at a quite speedy rate of 2.4%. Now, when we are looking at the next 5 years, gas burn in the power sector, this growth is set to de-accelerate and to grow by a mere 0.5%. And the reason for that is that gas-fired generation is pulled in different directions across different regions. When we are looking at the mature markets, here we see that gas-fired generation is entering a phase of structural decline. But when we are looking at the Asian markets and the fast-growing Asian markets in particular, such as China, India, and Carl will talk us through that in more detail, we see that gas demand growth in the power sector remains quite robust, as these markets also are diversifying away from their coal-based generation. And one example where we see that gas demand in the power sector is entering structural decline is, of course, Europe. Overall, European gas demand is expected to decline by about 8% between 2022 and 2026. And we expect that in 2026, European gas consumption will stand 20% below the levels reached in 2021. And this decline is very much driven by the lower gas use in the power sector, which is expected to decline by about 50 BCM due to the rapid expansion of renewables and improving nuclear availability in some of the markets, and also some efficiency gains. And when we are looking at the residential and commercial sectors, a return to average weather conditions would in itself drive up gas demand in those sectors. But we see more driving forces for retrofits, deployment of heat pumps, energy efficiency gains, which will also weigh on gas demand in these sectors. And then I think that one of the crucial questions is the future of gas demand in the industrial sectors in Europe. And here our assumption is that half of the gas demand which had been lost in 2022 is not going to recover. And of course, one of the key risks is the relocation of European industry to other markets where there is, gas which is available at a more competitive prices. So we see that there is a major risk going forward for European industrial gas demand. And on this slide, we are showing the structure of Europe's primary gas supply. In our forecast, Norwegian gas production remains broadly stable over the medium term. And when we are looking at the EU plus UK production, we see slightly different trends. In Northwest Europe, it is set for a continued decline because of the closure of the Groningen field, but also lower production rates in the North Sea of the UK. But this is in a way offset by higher gas production in some of the other markets of the EU, including Denmark with the startup of the Tira field, but also Romania and Turkey. Now, when we are looking at the Russian pipe gas deliveries, we don't expect them to recover, and actually we see them declining after the end of the transit contract between Gazprom and Naftogaz Ukraine. When we are comparing this supply picture with the lower gas demand, what we see actually is that the call on LNG is going to remain close to the levels reached in 2022 and will actually average slightly below those levels because demand is declining more steeply than domestic gas production. So in a way, there is limited, or more correct to say, there is no upside room for LNG in the European market. When we are looking at the medium term, it is expected to remain just slightly below the record levels reached in 2022. And now we would like to move to the more prosperous gas markets of Asia, and I would like to hand over to my colleague, Carl. Thank you.
Thank you, Gergely. So I will focus on Asia. So for the upcoming forecast period up to 2026, as Gergely mentioned, the global gas demand is going to decelerate compared to the previous 5-year period. What we see is that Asian gas demand will remain relatively strong, on the contrary, and will even accelerate slightly. So on the total amount of additional gas demand we expect for the next coming 5 years, 265 BCM worldwide, we expect that 185 BCM will come from Asia. So this means that Asia will account for 70% of the net growth in global gas demand from 2022 to 2026, which is a significant increase from the 33% we observed during the period 2017 to 2021. So global gas demand growth will be driven by growth in Asia, while major gas markets, North America and Europe, will reach a tipping point towards a slow decline. So China is a central driver of demand growth in Asia and more generally spoken globally. We saw in the previous slide that Asia accounted for 70% of global demand growth in our outlook, and China will account for 70% of this Asian demand growth, which means that China will account for about half of global demand growth over our outlook period. And this leads to China holding increasing weight in Asian market and worldwide. So the clear shift that have been underway from old markets to new markets in the past years is set to continue going forward. If we look back to 2016, the Chinese demand weighted as much as major Asian Pacific demand. That was around 30% of the region's market. And by 2026, we see that China will account for nearly half of Asian demand, taking up to lost market share of major markets like Japan, Korea, Australia, from now until 2026. And if we take a step back and consider the Asian market along this 10-year timeline, by 2026, we foresee that the Chinese market will have more than doubled from the 2016 levels. At the same time, the major markets will have shrunk by 12%, and emerging Asian markets will have grown by nearly 1/4. So if there are any doubts, the predominance of the Chinese market is now clear. So this substantial gas demand growth in Asia is set to come from a number of supply outlets, including pipeline and domestic production. But LNG imports will grow significantly over this period. We see a doubling of Chinese LNG imports by 2026 compared to the 2022 levels. And this accounts for nearly 2/3 of the total incremental LNG volume we expect to come on the global market over the forecast period. So China has been the key driver for long-term contracting in the past couple of years. So looking to 2026, China is expected to be sufficiently contracted with respect to its demand, which means less needs to access to the spot market. Now, despite the magnitude of the Chinese market within Asian gas market dynamics, we cannot ignore India and emerging Asian markets. Their growth over the last period we observed, it is to say between 2017 and 2021, the demand was relatively muted. Incremental demand is set to reach 70 BCM in our outlook for the coming period, which is more than incremental demand in other individual regions like Africa or the Middle East. So, however, it is important to nuance this. A share of this growth comes from demand recovery after a significant drop in demand in 2022 in these emerging gas markets because of a high price environment. This is different from Africa or the Middle East, which recorded a smaller hit to demand in 2021, or even recorded a demand growth as it was the case in the Middle East. So incremental demand in these regions incorporates much less of a recovery component than in emerging Asia. So it's important to highlight that Asia is not only China, but what is driving this growth in Asia? That's what we are going to see in the next slide. Overall in Asia, industrial demand is a primary factor behind gas demand growth, although the power demand, the power sector is significant. So what is key is the primary driven demand growth driver varies across the different markets. In both China and India, the industrial sector comes in first. These are markets where coal remains well ahead of gas in industrial energy use, and where there is a space for both coal to gas switching and continued industrialization that leads to incremental gas demand. If we turn to other emerging markets in Asia, gas demand growth is massively oriented towards the power sector, which represent both opportunities and risks. Because growing electricity requirements and policy to limit greenhouse gas emissions suggest healthy growth in demand in this sector. However, upside can be conditioned by two factors. The speed of the build out of renewables and the global gas price dynamics. So the power sector is a sector where price elasticity of demand is high, meaning that if there is an unfavorable LNG or global gas market conditions, there is a risk for the demand growth. So some markets have been burnt by the price spike in 2022, and managing this sort of risk could be essential to unlocking some of the demand growth. So it's important to mention that other emerging Asia here represents roughly a dozen countries. So incremental demand is not evenly split along all of them, but this does suggest that a lot needs to go correctly in multiple countries for this demand to materialize, such as the infrastructure development, policies in favor of gas over coal for thermal generation, adequate power market development, and so on. So I will move now to another continent, which is Africa. So Africa accounts for 1/5 of the world's population. It has the youngest and the fastest growing demography. But at the same time, it has the lowest level of energy access in the world. So despite holding more than 9% of the world's proven gas reserves and a vast potential for green energy, Africa remains the most energy poor continent. According to the IEA's Africa Energy Outlook 2022, which is available on our website, nearly 600 million people, or 43% of the total African population, have no access to electricity. So Africa accounted for nearly 40% of global new natural gas discoveries in the past decade, mainly in Mozambique, Mauritania, Senegal, and Tanzania. And as you can see on this chart ranking African countries according to their natural gas reserves in 2021, Nigeria has the largest reserves with close to 6 million cubic meters, or 32% of Africa's gas reserves, followed by Algeria with 25% of the continent's gas reserves, and Mozambique with 16% of the continent's gas reserves. Its significant natural gas reserves can turn Africa into a key player in the global gas market, and it can also improve energy access to its rapidly growing population. So we will come back to the prediction forecast in the next slide, but for the time being, let's have a look on the gas demand. Africa's gas consumption has almost tripled since year 2000. And the main consumers are also the main producing or transit countries of North Africa, plus Nigeria. In absolute terms, natural gas demand in Africa reached 170 BCM in 2022, which represent only 4% of the global natural gas demand, or if we want to compare it, a tenth of the annual consumption of North America, which is relatively low. So new natural gas markets are emerging in Africa, mainly for power generation, such as in Ghana, South Africa, and Senegal, to meet the growing energy needs and to replace liquid fuels, which are often imported. These new markets are supported by the development of production as well as the commissioning of new import infrastructure. So the current environment of high price and tight supply is particularly challenging for these price-sensitive countries. And it is likely to have a negative impact on the growth outlook for natural gas consumption. So overall, we forecast gas consumption to increase in Africa by an annual average of 3% as a whole over the period 2022 to 2026. But we have to consider uncertainties regarding access to investment for new infrastructure. African countries produce around 160 BCM or 6% of the world's natural gas in 2022, which represents twice the production in the year 2000, and roughly tripled since the year 1990. So the charts shows the evolution of natural gas production by country in Africa since the year 2000. The main producing countries were and are still Algeria, Egypt, and Nigeria, and which together today account for over 80% of the continent's production. Africa has the potential to become a much more important source of global supply. Of the natural gas produced in 2022 in Africa, 36% was exported, of which 61% was in the form of LNG. So the main destinations are Europe and Asia. Regarding Europe, as a result of the energy crisis triggered in 2022, exports by pipeline or in the form of LNG increased to Europe significantly and now represent 60% of total volume exported. In contrast, exports to Asia have halved compared to 2021 and represent 10% of total export in 2022. In the medium term, up to 2026, we forecast a global 10% growth in gas production in Africa compared to 2022. And production from Algeria and Nigeria are expected to grow by 10% and 15% respectively. New producing countries such as Senegal, Mauritania, Congo, and Gabon will contribute to the increase in production. But the forecast production could have been higher if there were not upstream concerns on legacy projects, such as in Egypt, for instance, or if projects under development had not suffered delays due to security and soaring costs, as in Mozambique. So next slide. So in 2022, around a quarter of the natural gas produced in Africa, which was 62 BCM, was shipped to international markets in the form of LNG, largely driven by Nigeria, which accounted for 41% of the LNG production in Africa, followed by Algeria and Egypt. So LNG production from Africa accounted for 11% of the worldwide LNG supply. And Africa's LNG export capacity is currently just over 100 BCM per year. And during the past decade and until recently, over a dozen new LNG export projects were planned or proposed in Africa. In total, new projects in Africa, and particularly in the sub-Saharan region, could add some 90 BCM of annual LNG capacity by 2030. But within the forecast horizon, up to 2026, only 17 BCM of an additional LNG production capacity are expected to be commissioned, and it corresponds to projects already under construction or not suspended for security reasons. So, in fact, what we observe is that the Africa's track record for LNG exported projects is not encouraging, and an example is the Mozambique LNG project, which has been added since 2021 following the declaration of force majeure due to security risks. Another example is the GTA LNG project, which is encouraging issues with environmental concerns and cost inflation. These problems are waiting on the prospects for investment decisions for other African LNG projects. Since the beginning of the energy crisis in 2022, some international oil companies and EU member states have focused on LNG projects to secure their supplies in this tight global gas market. So existing LNG contracts have been renegotiated to export more LNG to Europe, which was the case for ENI with Egypt, Algeria, and Nigeria, to mention just one example. And negotiations have resumed for LNG projects that were put on hold, such as Tanzania LNG. But considering the long lead times for LNG projects, all these commitments are not going to change the game for African LNG in the immediate future. For the time being, the continent's LNG activity will continue to be dominated by established players, it is to say Algeria and Nigeria, and in a lesser extent by Egypt, because it will depend in the coming years on its availability to meet first its domestic gas demand before exporting LNG. And in our medium-term forecast, Africa's share of global LNG supply is expected to remain broadly flat during 2022 to 2026 period at around 10 to 12%. And it's worth noting that the window of opportunity to monetize Africa's significant gas resources is limited, as the US and Qatari projects are expected to start delivering significant LNG volumes by 2027. And at the same time, the LNG demand is expected to fall from 2030 onwards, driven by decarbonization targets. So I've done. I will hand over to Gergely.
Many thanks, Carol. And last but not least, we would like to give some highlights on low-emission gases, which includes biomethane, low-emission hydrogen, and e-methane. And we are tracking quite closely the developments in those space as part of our low-emission gases work program. When we are looking at the medium term, we expect that low-emission gases will more than double between 2022 and 2026. And this will be very much driven on one hand by biomethane and by low-emission hydrogen, but more towards the end of our forecast period. Meanwhile, e-methane or synthetic methane is still struggling to take off. Now, of course, this is all quite significant growth, but it is still not sufficient to reach those ambitious targets which have been set by many jurisdictions by 2030. And as such, there is further efforts which are needed to unleash the full potential of low-emission gases. And one important point to make is that approximately 70% of this growth is expected to come from North America and Europe, where low-emission gases are benefiting from a well-integrated gas network and from more accurate subsidy schemes and support mechanisms. When we are focusing on biomethane, it is clearly the more mature type of low-emission gases. In 2022, we estimate that global biomethane production increased by 17% or 1 BCM, and most of that growth has been really concentrated in Europe and North America, primarily driven by Denmark, France, and the United States. But when we are looking at the medium term, so we expect that biomethane output will increase by about 65% over the medium term, and most of that growth will continue to be concentrated in Europe and North America. But we also see a number of bright spots, including Brazil, where we expect that biomethane production will quadruple, and India, where we expect that it will increase by 10 times, albeit from a rather low basis. And when we are looking at low-emission hydrogen, the picture is slightly different here. We expect that low-emission hydrogen will increase at a rate of 25% per year between 2022 and 2026, adding approximately 4 BCM of gas equivalent to the total mix. But what is quite striking is that there is a huge gap when we are considering all the projects which have been announced, proposed. So if all those projects would come to the market, it would add approximately 12 million tons of low-emission hydrogen or 36 BCM of gas equivalent. But what is quite striking is that only 20% of those projects are in a mature phase of development, which are either under construction or have taken a final investment decision. So there is a significant untapped potential when it comes to low-emission hydrogen, and we expect that based on the projects which have taken FID or which are under construction, in total, there will be about 2 million tons of low-emission hydrogen supply by 2026, equating to approximately 6 BCM of gas equivalent. And 80% of this growth will be coming from North America, China, and Europe. And this clearly highlights that there is a need to double down efforts related to the acceleration of the deployment of low-emission gases, and in particularly on low-emission hydrogen, where we see quite a significant gap between the ambition and what is actually happening on the ground. Here we are, showing some of the key takeaways and concluding points, but I'm conscious of time, and as such, I would like to reserve the remaining time to your questions and comments. So many thanks for your kind attention, and back to you, Charlie.
Thanks a lot, Carol and Gergely. I already received a few questions that have been lots of facts and lots of figures. There is one question regarding the subject of biomethane. What is your basis for the biomethane growth forecast?
So for biomethane, so the question when it says basis, is it referring to the base year? And this is based on actual production data from those markets where we have visibility. And when we are looking at what represent the basis of our forecast, it depends on the markets. In some markets, we have quite a good visibility on the projects which are in the pipeline. And that's actually most of the markets. So it is, North America, Europe, and some of the emerging markets. And I would say that it is very much driven by bottom-up approach based on the project announcements, and in some cases it is based on development plans which have been announced by policy makers.
And what is your expectation regarding to biomethane? Where will it be used in the future? Will it be used more regional, located where it is produced, or will it also be something that you could see on the export side?
Yes, so that's a very good question, and actually what we see is that there is a quite diversity in how biomethane is used. For instance, in North America, most of the biomethane is actually used as a transport fuel, and this is partly due to the policy setting, which is quite encouraging, the use of biomethane as a transport fuel due to the fuel standards. But when we are looking at, for instance, some of the European markets, we see that a lot of the biomethane is injected into the transmission network, and it is used in various ways and manners. So I think it really depends on the market setting, on the policy, what is favored by the policy setting. I think that there is a question mark on where biomethane is the most valuable, and I think that one of the important value of biomethane is that it gives a lot of flexibility in a similar fashion as traditional natural gas, but at a lower cost in terms of emission intensity. So I think that there is not a one answer which would fit all the markets. It really depends. For instance, in India, where we mentioned that we expect that biomethane output is expected to grow by 10 times. It is very much geared towards the transportation sector.
Mm-hmm. Thank you.
But
yeah. And another question regarding the very interesting African subject, Carol. If you look, well, let's say 10 years in the future, do you see Africa more as a supplier for the world with energy, or is the growing gas production in Africa more or less used for its growing population?
Yeah, that's a very good question as well. What we see is that the forecast for gas demand in Africa is very limited, whereas the need for energy in Africa, as we shown, is very important. So what we expect is that the project that will come online will be oriented to global gas market, and the LNG which will be produced will be sent to markets such as Asia or Europe for their needs as well. So yeah, what we expect is that on the total amount of LNG that could be produced, only a small part of it will effectively be produced and come online, and will deliver the global LNG market.
Mm-hmm. And Gege, another question regarding biomethane. Do you think biomethane will be dealt and even transported physically, or isn't it more a question of GOOs? I hope you know what is meant with GOOs, because I don't know it.
So I would imagine that it might be guarantees of origins, and of course, that's one way to facilitate trading of biomethane, and actually it is also maybe in a more cost efficient way actually to trade biomethane virtually via guarantees of origins. But I think that here we still have some homework to do at the European level, because of the guarantees of origins needs to be more closely aligned between the different European markets. So there is a bit of homework in terms of harmonization to be done. But of course, I think that the dream many of us have is that one day biomethane will be, traded in a similar manner as natural gas, and it will be, potentially there will be biomethane derivatives, and it will be traded on exchanges and via OTC, and it will be a liquid market. But I think that before we get there, we also need to build up the hardware and a sizable biomethane production, because at the moment it is still quite small. We are talking in Europe about 4 BCM of biomethane production, and globally about 7 BCM. So there is still a long road to go.
Mm-hmm. Let's have another short look on the natural gas side. You mentioned, Gergely, that at Henry Hub in the US we see lower prices than in Europe at the TTF. Do you have any proposals for Europe to close this gap?
I think that at least when we are looking at the long term, gas prices are reflective of the supply-demand fundamentals. And I think that Europe, in a way, needs to continue its efforts of reducing natural gas demand in a structured manner. And this means that we need to tackle gas demand reduction where it is the most cost efficient and where it makes the most sense. And for us, it is clearly the power sector, but also the residential and commercial sectors. And this is achieved by enhanced energy efficiency and quicker deployment of renewables and heat pumps. I think that by reducing the European demand, this could of course ease on the pricing tensions. And then one second point to which we already alluded during the presentation is that towards the end of the forecast period, there is massive LNG supply coming into the market, mainly from Qatar and from North America. And this will ease the market tensions and could also depress gas prices, and as such could indeed, maybe not, of course, not close, but tighten the gap which we are currently witnessing between TTF and Henry Hub prices. Mm-hmm.
And one last question. You mentioned, and we all know that, the reduction of Russian pipe gas, but can you say some words about the role of Russian LNG for the market and in the market?
Yes, certainly. If we are looking at the European context, we have seen in 2022 that Russian LNG supplies to Europe have been increasing, but at the same time, the share of Russian LNG in the total LNG supply mix have been decreasing. And when we are looking at the last 10 months of 2023, what we see is that Russian LNG supplies to Europe have been broadly flat compared to 2022, and they are very much also reactive actually to the price differential between JKM and TTF, because a lot of the Russian LNG which is coming from the Yamal liquefaction plant is actually underpinned by destination flexible contracts. I think that maybe one point to highlight is that most of the Russian LNG imports in Europe are concentrated in just 3 markets, Belgium, France, and Spain. And, in a way, the future of Russian LNG in Europe also depends on the policies which might be undertaken or might not be taken by these countries and their respective LNG importing companies.
Okay, thank you very much. Thank you, Carol and Gergely, for these fruitful insights in the international gas market. It was again very interesting, and we are looking forward for to the next report in 3 months. Thank you very much. Vielen Dank auch an Sie, liebe Zuschauerinnen und Zuschauer. Vielen Dank für Ihr Interesse. Ich glaube, es war wieder eine sehr interessante und spannende Stunde voller Fakten, Zahlen rund um den Gasmarkt. Die Präsentation und den Report werden wir Ihnen im Nachgang zu dieser Veranstaltung gerne zusenden. Und ich wünsche Ihnen einen erfolgreichen Tag, eine erfolgreiche weitere Woche und bleiben Sie gesund.